Warren, the first 3 months of the year's gone. It's almost like we live in another country. If you look at December last year, we have a new president, we have a new cabinet, we had our first new budget, and there was changes in the budget. If you look at the principle that a quarter of the year is gone and the changes in the budget, how would you approach your own financial situation?
I think the first thing to consider with the budget was the impact of VAT. So they've increased VAT from 14% to 15%, and that does have an impact on financial services because that's actually one of the things that will be increased, or the cost will be increased. So unfortunately, it's not zero rated like some of our foodstuffs, and so our clients and investors will be paying more. So I think as a principle, just to understand that is one. Unfortunately, we can't do anything about it. It's going to happen from the beginning of April, and we just have to deal with it. But the second thing has been around retirement funds. So we just need to understand that retirement funds can now increase their offshore allocation quite a bit, by about 5%, which is quite a big jump. So as a reminder for everybody, if you haven't done your retirement fund contributions, whether it's an RA or your pension fund or your provident fund, make sure that you are maximizing your retirement fund contributions, because that offshore allocation now helps quite a bit. You don't just have to try and keep money out to do your offshore investments. And then I think the third big issue is around our tax-free savings accounts. So we're in an environment now where we are now allowed to move tax-free savings accounts from one product provider to another. And so all the product providers need to catch up with that. But it's just an important thing to remember. Take advantage of that opportunity given to you by Treasury. It's one of the few things in life where we can do something tax-free. So make sure that you're doing your RAs, your tax-free savings, and just know that your costs are going up for financial services.
Warren, for tax-free savings account, what is our preferred vehicle and why?
Tax-free savings investments, you have to understand, are very long-term vehicles. It's going to take you more than 16 years just to build up the lifetime allowance of 500,000 Rand that you're allowed to invest in them. So it's certainly not a thing that you use to put money in now and then go on holiday next year. It really is for long-term investments, which means if you're investing in long-term investments, you need to have growth assets. Those would either be shares or listed property. And I really like listed property for tax-free savings because listed property companies generally pay out rent, and that rent for most of us would be taxable income. But in a tax-free saving, it becomes something that you get tax-free as an income over your lifetime. So if you do build up that account over a long period of time, you could be in the situation where you end up with 1 or 2 or 3 million Rand paying out a very nice rental income that you could use to pay off some of your lifestyle costs. So for our business particularly, we think tax-free savings should be in listed property.
Just a reminder from our point of view, we always thought that with the Rand stronger at 13.50 to the dollar, you should increase your international exposure. Well, we are stronger than that. So make sure that you speak to your advisor and make sure that your international exposure is in line with your long-term planning. International exposure is not about growth. It's about diversification and risk management. So use this opportunity to increase that exposure if it's below what you wanted.